In the video that I made on the 5 ways to invest in real estate, I mentioned Fundrise as a potential way to invest. So in this video, I'm going to take a deeper dive and give you my honest review on the Fundrise real estate investing platform. Full disclosure, I do have some money invested through Fundrise, but I promise you it's not that much money, and that is not going to stop me from giving you my honest thoughts on this platform. If you feel like I'm being biased in any way, then please, by all means, call me out down in the comments below because I deserve it. Also, after you finish watching this video, let me know down in the comments your thoughts on the Fundrise investing platform in general. I'm kind of curious to get your point of view to see what you think about it. Hey, I'm Jarrad, and on this channel, we like to talk about all things personal finance and investing. As always, please Hulk smash that thumbs up button. It helps support myself and this channel, and I greatly appreciate you for it. Fundrise is a crowd-funded real estate investing platform that allows you to invest in million-dollar deals without the actual millions of dollars that you would need to invest in projects just like that. Hence, where the crowdfund word comes into play. This is a way for you to invest in private market real estate that in the past was only available to very, very high net worth individuals. Think of Fundrise like the new hip techie millennial version of a REIT, I guess, is the best way to explain it. They have a nice little interactive website that is very appealing to us younger folks because we love those pictures and graphs and showing big numbers of how much money we can earn. The difference between Fundrise and a traditional REIT is that Fundrise is not publicly traded on the stock market. There's 2 different ways that your money could grow if you invest through Fundrise. The first is through dividend payouts. Now, the cash return is paid out on a quarterly basis, so keep that in mind. And it usually comes from one of 3 sources. The first one is by making money from the sale of an investment, a return from lending money on an investment through interest on the debt, and third is by collecting rent payments. The second way that your money can grow is through the appreciation of a property that Fundrise will invest in for you. This could rise for many different reasons. One of the reasons is there could be an increase in the real estate market overall in the particular city that you have projects going on. It could also be from doing different renovations to increase the overall value of the property that you are investing in. Fundrise is really transparent on what your money is actually invested in. Once you choose the plan, they'll kind of show you the details of each property within your portfolio. This will, of course, depend on the type of investment plan that you choose. The first option is with the goal of supplemental income. Now, with this option, you're more focused on getting a consistent dividend payout every single quarter and not too concerned with getting most of your value from appreciation. The second option is their long-term growth strategy. Now, this plan focuses more on squeezing the returns from the appreciation of your real estate and less from those quarterly dividend payouts. If I had to guess before seeing these numbers, then I would assume that the third option is where most people choose to put their money. And my guess is actually correct because they say that 43% invest in this plan. That is, of course, the balanced investing portfolio. It's kind of like the buffet of Fundrise. You want a little bit of dividends, you want a little bit of appreciation, and you want to feel full at the end of the meal. Each one of these investing plans boasts their own special return. For example, the supplemental income plan projects an 8.3 to 9.8% return. 8.3 to 9.8? Are you serious? If you're like me, then you're like, that's really high. And yes, you heard me right in those numbers because that's what they're saying on their website. And that's just the first plan. Wait until you hear the rest of these numbers. The long-term growth plan says that you can expect a 9.1 to 10.6 return. Holy smokes, that's way better than that measly 7 to 8% that we should expect from the stock market. So this means, of course, that we should move all of our money to Fundrise, right? Hold on, don't do anything with your money yet. We're gonna dive a little bit deeper into these numbers because I think this is a little deceiving. And finally, the balanced investing plan is calling for an 8.7 to 10% projected return. So that means that a $10,000 investment would be worth $60,000 in 20 years. Something seems really fishy, but either way, these numbers are getting me all hot and bothered, so I need to stop for a minute. Just hearing those numbers makes me start to question what is really going on. My grandpa always told me that if it smells like a chicken, but it looks like a fish, then you need to ask more questions because that's probably a fish dressed up as a chicken. I don't necessarily want to say that Fundrise is trying to pull one over on us, but to understand why they're projecting these returns, we need to take a closer look. I'm guessing that they're basing these numbers on the returns they've seen since the company started. Fundrise was founded in 2010. Now, what do we know about a couple of years following 2010? That's around the year that the real estate market had completely bottomed out. 2011 and 2012, if you want to be a little bit more accurate. Since then, the vast majority of people who have invested in real estate have cleaned house and have seen huge, absolutely huge returns as a result of growth in the overall economy and the housing market. We have to take this into account that this has helped them get those amazing average annual returns of 12% in 2014, 12% in 2015, 8% in 2016, and 11 and 9% in 2017 and 2018. I gotta give them props. Good job, Fundrise. Respect for knocking it out of the park in this area. I get that they want to project these future returns, and who knows, they might actually be accurate. It's absolutely possible because we can't technically predict the future, but one thing Fundrise has is going against it when they state these returns is that they haven't gone through a downturn in the market yet. I'm just curious what the returns would be after a mini or major real estate market correction. This is the main reason you should only expect about a 7 to 8% return in the stock market, because the stock market has been around long enough for us to know that even though your portfolio might be up, we'll say 300% over the past 10 years, once the market corrects itself multiple times over the next 30 to 40 years, you should only expect an average return of 7 to 8%. Let's give Fundrise credit and show a comparison over the past 5 years. Since 2014, they've had an annual average return of almost 10.78%, which the Vanguard Total Stock Market has yielded 7.92%, and the Vanguard Real Estate ETF has yielded 7.4%. That almost 11% is of course before the fees that Fundrise will charge you. More about that in a minute though. Fundrise is fairly cheap to start investing. Their minimum is $500, which is pretty reasonable in my eyes. Now, it's not as cheap as the Vanguard REIT VNQ, which the minimum is whatever the share price is at that point in time, but I would consider $5 pretty good. But speaking of fees, let's dive into this fun topic to figure out how much Fundrise is actually costing you. Keep in mind that the fees involved in anything you invest in are extremely important, especially when you're investing. Fundrise charges a 1% overall total fee. Of that, 0.15% is to pay for an investment advisor to manage your portfolio on their platform, and 0.85% is to manage your assets, so the properties that you are actually invested in. Now, when you compare that 1% to the 0.12% fee of the Vanguard REIT VNQ, that's pretty high by anyone's standards. You could also be charged by Fundrise an additional fee between 0 and 2% for something they call asset origination and acquisition. That's an up to 3% fee on your money that Fundrise could potentially charge you, which is absolutely insane, and I would normally recommend for everyone to run away as quickly as possible. But one thing to note is that up to 2% fee is more of an exception than it is a rule. I wouldn't expect to be charged this additional amount on a regular basis, but it is good to keep in mind that they do have the ability to charge you that much under certain circumstances. Worst case scenario, that average 10.79% return over the past 5 years goes down to a 7.79% return, which would still be a higher return compared to the 7.4 of Vanguard's VNQ. Another thing you need to know about is that there's more potential fees involved, but only under certain circumstances. Real estate investing should be looked at as a long-term play no matter what. If you don't understand that, then forget investing in real estate to begin with. When you buy into one of Fundrise's plans, you're giving them your money so they can go out and use it to make deals that will ultimately make you more money. Real estate in general isn't very liquid, so it's not always quick and easy to sell a property to have cash in your bank account tomorrow. Because of this, Fundrise puts some safeguards in place to help prevent you from investing your money with them, then trying to take it back out within a short period of time. You have 90 days to withdraw your initial investment at a charge of 0%. If you try to sell within the first 3 years, then you'll be charged a 3% fee. If you try to sell between the 3 and 4 year mark, then you'll be charged a 2% fee. And if you try to sell between the 4 and 5 year mark, then you'll be charged a 1% fee. Since Fundrise shares aren't publicly traded on the stock market, they can't guarantee to have someone sitting around waiting to buy your shares that you want to sell at whatever point in time you want to sell. I actually don't see a problem with them charging these penalties because I get it. Real estate is a long-term investment. Keep that in mind. So if you want something more liquid, then invest in a publicly traded REIT. You can use my favorite investing platform, M1 Finance, to invest in REITs. I've got a link in the description to open an account with M1 Finance. Let's talk about everyone's favorite topic, taxes. Specifically, taxes on the dividends that you receive through Fundrise. These dividend distributions are taxed as ordinary income. They are not taxed the same way as capital gains. taxes. In the case of capital gains tax, your rate could be 0, 15, or 20% depending on your taxable income and how long you've held the investment before selling it. When you receive a dividend though, you basically add your dividend payout to your total income for that particular year. So if you're a single person who makes $82,500 from your full-time job, then your tax rate is 22%. Now, if you're someone who invests through Fundrise and your dividend payout for that year totals $1,000, then we'll need to add that $1,000 to your total income. The total of your income for that year is now $83,500 because $82,500 plus $1,000 equals $83,500. That $1,000 dividend now puts you into a new tax bracket, which is 24%. Since the Fundrise dividends are taxed as ordinary income. I'm not saying that this is a bad thing, and there are ways to lower yourself back into that 22% tax bracket, which we won't talk about in this video right now, but this is just something to be aware of. Also, keep in mind that in this example, only the $1,000 would be taxed at 24%. So let me give you my final thoughts. Overall, I like what Fundrise is doing here. They're making larger real estate investing deals available to the average person like you and I. They do allow you to invest in Fundrise plans through an IRA. Now, I'm not a huge fan of doing this. The platform and idea of crowdfunded real estate hasn't been around long enough for me personally to trust making it a part of my retirement portfolio. I think we need to see what happens once it's been through a correction or a crash or a mini downturn in the real estate market. We need a bigger sample size of at least 10 to 15 years before we're even thinking about putting this into a retirement account. I like Fundrise if you're looking for an alternative way to invest some side cash that you have lying around that you don't mind tying up for at least 5 years. The cash that I have invested through Fundrise is an extremely small portion of my total net worth and total money that I have invested. I actually plan on using my Fundrise money to buy the next car that I need in the next 6 to 7 years. Let me know in the comments what you think about Fundrise overall. Does it seem like it's worth your time and money? I'd love to hear your opinions. Please Hulk smash that thumbs up button. Check out these videos around my head, and I have all kinds of links to more personal finance and investing videos in the description to help you out. And of course, subscribe if you want more personal finance and investing videos just like this one. I'll see you in the next one, friends. Adios.